Good morning. This is working. That's great. So first of all, an apology on behalf of Christina Frankopan, who was actually going to be moderating this session. Actually, her 5-year-old Leonardo is ill, so that's why she can't be here today. But the good news is that Leonardo is actually one of probably the first sort of truly crypto kids. He already kind of dreams about blockchains and literally draws how he conceives of them, and hopefully is highly optimistic about what they're going to bring to his future. But he is a little bit ill right now, and I'm sure he'll recover, but that's why she's not here. So I think I've just pulled together some thoughts to challenge this very fine panelists with in a second. But just to key off the last discussion, I think we're definitely in a bubble, but we're in an absolutely essential and totally transformative bubble, and we certainly don't know how far through that bubble we are. And there's some good work on that topic by Bill Janaway in a presentation and a few bits of writing he did in 2016 that about productive bubbles is pretty well worth looking up. And it's on that note of kind of excitement and optimism that I definitely want to kind of launch into this panel on how VCs or other investors can get involved in supporting that productive bubble. And I'm going to hand over quickly to each of the panelists to introduce themselves and what they're currently up to. And as far as introduction to myself, I'm an entrepreneur who's built a few businesses and I'm now investing with Firestarter and OpenOcean, and I'll leave it at that. First over to Ryan, Polychain.
Well, thanks for that. My name is Ryan Zur, and I'm a venture partner at Polychain Capital. And so I work with our portfolio companies and just helping them grow and structure and kind of prepare their roadmap and what have you. And I'll be giving a talk later this afternoon where I'll talk a little bit more about our thesis and approach to the space. So I'll leave it at that.
Is this one working as well? Yeah, okay. So I'm Jamie Burke, CEO of Outlier Ventures. We've been investing in the blockchain space for about 4 years. We've been cautiously watching the whole ICO space. We made our first investment beginning part of this year into IOTA. And actually, it was largely driven by a number of other factors around our thesis. So we're kind of focusing primarily on what we call convergence. So that's where blockchain-like technology is foundational to things like AI, 3D printing, IoT, scaling securely. And IOTA fell well within that. We're probably going to be doing 4 to 5 token issuances, don't want to necessarily call them ICOs, over the course of this year, where we're involved in the beginning. So we're involved in the design, the kind of crypto economics behind it. And usually it's always where we're going to be sitting on the foundation or where we have kind of direct value to contribute from our corporate network. So typically kind of B2B style protocols.
I'm Eddie Travi. I'm the co-founder of Coincilium. Initially, I co-founded the first global incubator in the space back in 2013. At the time, we were mainly investing in Bitcoin and cryptocurrency startups. And since then, we moved to London. So we're based here. We're quoted on an exchange called Next Exchange, which is a recognized stock exchange in London. And we have invested in 17 blockchain companies since then. And most recently, our first 2 companies that are going to issue tokens, one in July called CoinDash, which is a social trading platform for crypto assets, and one in August called Indoors, which is a Ethereum-based decentralized platform for professionals.
Great, thanks, guys. So I'm going to sort of jump over the question of why is it necessary to invest in token distribution events rather than to invest in equity, in the hope that people understand that in the context of the decentralized world. But feel free to sort of expand on that if you wish. But maybe we could then go into whether or not venture firms are set up to back these companies in the decentralized economy today, and you know why they are or they are not. Do you want to take that? Ryan?
Sure. I mean, we think there's still very much a position for institutional investors in the space, but the focus has to be on adding value. And so the nice thing about, or one of the many nice things about the token structure is that you develop this open source community around your project. And typically those sort of 4,000 to 10,000 distributed investors end up adding a tremendous amount of value. You build this community that becomes your first beta testers, your first users, your first, add technical help. And so because these open source projects are getting so much value from their investors, the institutional investors have to then be prepared to add that much more value than has traditionally been the case. And so really the niche that we see for the institutional investor in this space is about being able to add a suite of professional services or help projects along and work very closely with projects.
So I'll be a bit more controversial. No.
Expand.
So most VCs are simply just unable to invest in the space. They're LPs.
Why is that?
The sort of terms that they've got with their LPs that they're locked into generally, and this is a generalization, prohibit participating in magic money. It's just not something they can get signed off. Pension funds are going to be a bit cautious about this. So, which is great for people like us because, we're a partnership. It's our own money. We can do what we want. I'm sure it's similar to you. So that's technically most can't participate. But then the second piece is most don't really have a clue what's going on. I think you speak to. I'm constantly being approached by people from other VC firms saying, "Hey, can we swap notes?" And again, the answer is no. Because largely their partners aren't even aware of what tokens are. They've got some analyst, bless him, who's trying to help them figure out what's going on. Very excited, yeah. Wants a job usually, and so these guys are going to be generally locked out of, I think, the most exciting part of the next phase of the web, which again is kind of great for us. And then I think, thirdly, even if they got their heads around the opportunity at a general level, they're not really going to be able to add much value in terms of how understanding crypto economics. Yes, they might have a corporate network that they've invested with previously, but the kind of value requirement is going to be very different for an open source project, effectively. That's what these are. They're kind of open source ecosystems that are trying to build an economy. And
Got it. No, makes sense. So the good news is I was listening to Eric Voorhees from Shapeshift speak on a podcast the other day, and he was saying that actually European venture investors might have a better idea about what's going on than US ones, and we will take any small advantages that we can get.
Actually, I should maybe defend our investors a little bit here. So we've been very fortunate to have Union Square Ventures, Andreessen Horowitz, and some other very large institutions investing, and I can say that they're thoughtful people, and they're getting smart in the space really quickly. And so the idea that they're like permanently locked out is probably not.
Absolutely, I was going to say that clearly there are funds that have worked out how to have a conversation with their LPs. And to either take some of their kind of ill-gotten Uber gains and put it in a little slush fund for the a side pocket, or to start a whole new fund. That's clearly happening.
I just want to jump into that though, because I think as I said, it was a generalisation. They're probably the only 3 or 4 that can and will. And actually, I would argue that they've led. So Union Square Ventures, have not just kind of participated; they've actually led the debate. But again, they can kind of do what they want. Same as and Pantera Capital, I know, on the West Coast,
and Polychain absolutely are certainly pioneers right at the forefront. So look, we established there are people wising up. There's ways of getting there, but we've been talking about the fact that there's specific technical skills required in order to perhaps make the right decisions, but also add some value. Eddie, do you want to comment on maybe the next level of detail about that, and anything else you want to say?
Yes, sure. So I think what Jamie is depicting as a picture is kind of the situation right now. So I agree with him that right now I would say most of the VCs, apart from the leaders in the US, which are invested in companies like Polychain, most of the VCs out there are not really ready to understand, are not really ready, let's say, to embrace it at the moment. But I think there is a learning curve. And I think that a lot of VCs are getting attracted because they see the return, but they also see the shift. I mean, the model, the VC model, and the role of VCs is changing. I mean, that's I think the point I want to make, because we have always been helping companies to in the early stages with different services, more akin to an accelerator or an incubator. So our model is still to take equity and to get tokens. So for the moment, we're not completely moved to the pure token play, right? Although now I'm speaking to companies that say, well, we don't need to give you any equity because we're going to do a token generating event, right? So it puts investors in a different position right now. But I think VCs and investors in general are going to react. I think they're going to set up companies or investing firms that can adapt to this new model. And I think that's actually a very good thing because, there is a need for more professional investment in the space. And although it's great to have this network and it's great to have these distributed investors, I think there's still a need for professional help for all these startups, which are businesses like any other business.
Got it. Thanks, Eddie. So if we look at the numbers, according to Turing Advisory Group, there's like a few $100 million that has gone in from VC into this space in 2017 so far, but sort of close to $1 billion from TDEs. And we've seen specific companies or foundations raising very large numbers. So what happens next when you raise that much money into a foundation, or what should happen next, and what will happen next?
Yeah, well, I mean, I think, so again, you kind of have to look at these aren't really startups. It depends how they're structured, right? So, I mean, in some instances, they are literally just startups trying to bypass securities laws, right? It's just, there's not really any...
Probably best to steer clear of those.
Yeah, exactly, yeah. And there's no real utility function in the token that they're designing. It's blatantly a security. So discard those, because they'll die.
Or go to jail.
Yeah, or go to jail. Yeah, exactly. And so you kind of focus on where people are genuinely building protocols with tokens that have utility function, that have had a decent level of consideration about game theory or just economic fundamentals to incentivize certain kind of behaviors. And when you're looking at these kind of things, you can't think of them as a startup. You have to think of them as an economy that's being built. And from an investor perspective, that's really exciting because actually, depending on how the IP is structured, if it's genuinely a foundation and it's generally open source, then actually you're no longer backing one team. You're backing a community to deliver on a vision. Actually, it could fork, and that's not always going to be a bad thing as an investor. So it's far less risky investment, I think. So whilst you look at some of the numbers, IOTA, I think our investment's at 1 billion now on a market cap, and if you consider that as a startup, it's just bonkers. It's you couldn't value it at 1 billion. But if you look at the community that's been mobilized around it, they're solving a known problem in the IoT space. How do you secure industrial IoT? And they've got a genuinely innovative bit of technology. So now I think when we have a cull of everybody and every man and his dog ICOing now just to raise lots of money quickly, and we start to get to people that are really building sustainable little economies, microeconomies, I think that's when things get really exciting.
Great. So actually, someone shared with me a way of thinking about this, which is that not just you sort of funding a community, but really you're creating kind of an endowment for a community. So you shouldn't think about the total number, and you shouldn't behave like a kind of someone who's inherited that money at 21 and then go and spend it. You should. It's something you need to invest in, where the community needs to live off the interest. If we think about that and think about all the work that needs to be done, how long is this going to take to play out?
Yeah, so this is a really interesting point. And while there's a lot of pessimism regarding some of the enormous sums of money that have been raised lately, we do need to remember that this is a totally different model than the venture capital model before, and you really can't apply the same sort of metrics. So, for example, I would argue that Mark Zuckerberg would not have sold, say, 80 or 90% of Facebook even for 200 million at the seed round. And we need to remember that a lot of these projects are distributing basically, the lion's share of the value in what looks like a seed round. And then for some very ambitious projects that will be decades of development and iteration and community involvement and things like that, they need to be very thoughtful about how they approach sort of vesting that money over time and also hedging a certain amount of that money over time, and so to have an active kind of money management strategy to be able to provide funds for a very long period of time. Because we've had situations where projects came very close to near death. I mean, Ethereum, we were down to like $1.5 million in the coffers of the Ethereum Foundation before some things turned around, and now obviously things are very good. But we wouldn't want to repeat that, and so sometimes it's actually good that a thoughtful technical team has a very significant, say, war chest for building for the long term.
Absolutely. So I don't know, Eddie, whether you want to comment. I mean, it sounds like that, the liquidity of the markets for these tokens, the kind of in the aftermarket, is going to be pretty critical for making sure the community is incentivized to maintain and run the nodes and so forth. And if you look at what at least hitherto people would think of as the most sophisticated markets, we've had plenty of ups and downs and crashes. So how are we going to do better than that?
Well, I agree that one of the main attractions for investors is actually that liquidity as well. I mean, it plays on both sides, obviously. The projects that are getting funded, they like the fact that they can go back to the market, issue more tokens, or at least benefit somehow from the appreciation of the price. I'm always a little bit wary when I hear metrics don't apply. I mean, I understand where that comes from because, I've been in the space and I see that, yes, numbers may seem huge, but there are big needs and there is big need for development. At the same time, that's exactly what we were saying in 1999. Metrics don't apply to internet companies. I think it's not the fact that, or it's not the same metrics. I think it's not the fact that the metrics are different or they should be perceived different. I think the whole market has to change. I think in the same way that in 1999, very few people could understand why Amazon was valued that much. I think the same problem is today. Why do these companies need hundreds of millions? Or why would their market cap be so high? Actually, the market has to change, and some things have to change so that actually the potential of these companies becomes true. So for example, 3 years ago, there are many companies that have exactly the same kind of model or the same kind of prospect market as they have today. But back then, it was completely utopia because there was, for example, there were not so many traders and the volumes of these exchanges were much lower. So basically, there are many companies today that can survive or that can raise a lot of money and which couldn't do it 3 years ago just because there wasn't the critical size of the market. So I think the whole system has to change. And basically what I think a lot of people are investing in, they're investing in the fact that it will change and these companies will become relevant and their models will become relevant when the ecosystem has evolved.
I mean, I think you can also do some very basic things, and I think this is where the role of a VC is important, or at least a professional investor. It's very easy to put build vesting in, smart contracts where the tokens vest to both the early investors, the pre-sale investors, and the founding team. And actually, that's something that we're encouraging in the iShares that we'll be participating in. And we mirror it, right? So we have the same liquidity as the founding team. But then I think, to your point around the kind of models, you got to remember, really, we're building open source communities, so they are measured differently. But at the same time, we're talking to. In fact, I think all of the token issuances that we'll participate in this year are coming from established startups that already have customers, already have a product, and already have a team that have been working together for a year or 2 years. And what's really interesting is, and often they're AI companies or 3D printing companies, so they're not native to the blockchain space, but they've realized, DLT can better enable what they're trying to achieve, and then they can finance through token issuance, and they can fast track because they all need network effect, right? So this is a great way. It's kind of network effect on steroids, because your open source community directly participate in the upside of its success. And so it's a great way that one of them described it to me as they had their 5-year vision. Currently, they were busy servicing the client who would pay them quickest, and that was defining product roadmap, and it kept them very far away from their 5-year vision. What happens when they start considering a token issuance is, he said they telescope. So it allows him to go big within the first 1 or 2 years. And one of the other things I just throw in is, let's say you raise more money than you need, which would seem really inefficient from a market perspective. But you could then use that for acquisitions. And so one of the ways we're having these startups consider the ecosystem is, what is partner, what is disrupt, and what is acquire? Because effectively they can raise considerable funds. And think of SoundCloud now. I mean, for me, that could be ripe for a community takeover, for example.
It's a super good point. So there's lots of work to be done around vesting, about the actual structure of the organizations that we're investing in. In fact, the economics around professional investing need to be looked at. And so that does sound perhaps somewhat treacherous. There's a lot of things in flux. At the same time, to echo what Jamie's saying, I think it's clear that we haven't even begun to see the native decentralized companies being built, let alone to see the existing economy of startups try and marry this new method of funding with what they're doing. And there are folks here today who are obviously looking at that. But with that, because I think we may just have a couple of minutes left, it would be great to see if there's anybody in the audience with a preference for entrepreneurs trying to build new companies in the first instance who have questions.
Thank you. Alex is from ACE Platform. You were talking a lot about individual ICOs, companies, factories, opportunities, and there's something that should be discussed about is also about the network, how the building the infrastructure to connect them, because like you have economies with entrepreneurs, they have to interact somehow, and issuing those tokens everybody's doing now, they have to exchange somehow, they have to interact between each other. And do you believe that the current system of exchanges now of tokens is in a crisis, is it a bit in the old-fashioned ways, and it has to be changed and improved?
Can I paraphrase what you're saying to the question, will there be decentralized exchanges and other API platforms for achieving such things?
So I'll take this opportunity to plug a couple of projects that we're pretty excited about. One is 0x, which is a decentralized exchange protocol, which will allow for sort of seamless exchange of ERC20 tokens, but then eventually all tokens. Cosmos is doing some great work with the Tendermint protocol on cross-platform exchange, and then obviously Polkadot is arguably the most ambitious project in the history of the space. And when it's ready in a certain period of time, because it's an incredibly complex project, that will allow for sort of seamless, even smart contract calls across blockchains. So I would not say that we're in a crisis with respect to a token exchange. I would say that there's amazing, flourishing innovation in the space around this area.
I'd echo that. Yeah.
Yeah, the only thing I'd throw in is, in a way, it already exists, because IOTA, for example, before they listed on an exchange formally, they had a private market just running on their Slack group, and that literally built up a market cap of 500 million. And so they did that over a period of a year. Now, of course, that's open to all kinds of activities, shall we say, or vulnerable to them. But in effect, that was happening before any listing.
Eddie?
Well, I think that there is a current trend towards decentralized exchanges. Closer to home, in a way, I've been following the project from ANX called OpenANX or AX, and I know of other projects like BitSquare. So I think there have been always the need for these decentralized exchanges. I think the challenge is going to be obviously anything to do with regulations, KYC, etc. So let's see how the two will coexist in the very near future. Is going to be very interesting.
Yeah, I mean, it's important to say probably quite a few exchanges won't be here next year with the SEC.
So be on the right exchange. Question? Thanks.
Yeah. I'm Steve McCloskey. I'm currently running a virtual reality company the last couple of years. We're called Nanome. So we're gearing up to launch our token Matrix pretty soon, August 22nd. But you had mentioned, Mark Zuckerberg, if the token was around, would he have funded this company like this? And you also mentioned acquisitions. So do you think that Facebook would have also ended up acquiring Instagram or acquiring these other companies? Or do you think we're shifting to more of a buying tokens in another foundation, and everybody sort of has a vested interest in everybody else because of the token ecosystem, and something shifting more towards that idea as opposed to just straight acquisitions?
I think it's a super interesting question. So M&A in general, whatever the throwaway stat is, only 65% of mergers actually ever work because they're kind of complex to do things like culture as well as the finance. So how could mergers and acquisitions work in the context of this economy and foundations where different economics and different cultures and different governance? Any thoughts on that?
I think the first thing we should mention is that there's still a little bit of gray area in terms of, as we all know, tokens are not shares of companies usually, and of course could be argued that it's a new type of shares, obviously. So you can have still your private company 100% owned by whatever group, and then have another structure which has been issuing tokens, and then it's very difficult to measure the correlation between the two. So I think that makes it more complex exactly for any M&A type activity. I think what we could see, and maybe that's what Jamie was referring to, is more, you get a treasure chest, you get a lot of money from selling tokens, and maybe you start buying actually startups in a very traditional way. I'd be excited to see where this is going, and this could happen.
I think you're definitely going to see startups, especially or projects that have raised considerable funds, make traditional acquisitions and bring companies into their open source project. And you're also going to see, and in fact, I can't go into details, unfortunately, but we're starting to see some mergers of different synergistic token communities in the space. And if you sort of think thoughtfully about some of the projects in the space, you could probably come to the conclusion of some of these that are happening right now. So this kind of M&A activity is definitely going to happen. But again, when we go back to the difference with the fact that these are open source incentivized communities, we may see totally different metrics with respect to the success, because it may be, I'm hoping that it's actually more seamless to integrate one open source community into another rather than trying to integrate one corporate into another and all the sort of bureaucracy that exists there.
I think you've also got to remember that most M&A happens to kill competition, right? So it's not meant to integrate; it's meant to kill, and that's really interesting when you can't acquire a protocol. You can't acquire. So SAP, for example, I had him on stage at an event we were doing, and he said normally we acquire and we're pretty aggressive in why we do it, but there are going to be huge critical infrastructure now that they can't acquire. So they can only participate in. What I really like about it is it's almost this tokenize everything, right? We're going to be moving into a world where the guys with the capital and the network effect and the community are going to be the ones who are going to be able to start acquiring these kind of fairly static equity-based businesses. And sometimes that's once they've raised the money, and sometimes that's in advance. So we're involved in a token issuance this year, and they've already agreed with 2 startups, we will pay you X money for your IP, and it's going to be open source and part of the community. So that's part of their launch roadmap, actually.
So we've got a couple more questions here, and then I'm going to hit you guys with a rapid fire question, which is going to be one super quick practical tip for people building new foundations in this space.
Hi, Simon Kelly here from Connection Plus. I have a kind of scale question, which is, we're working on a project to tokenize, everything around us here, real estate. And I hear talk of big numbers here, but for us to deliver our vision, we need to move into billions of dollars to construct new real estate in this kind of new economy. And I'm curious what you guys think about when we get real financial scale in the sector and how it might grow, up from the tens of millions to the billions?
Yeah, I mean, that's probably the fifth one I've heard this week of people looking to do property. And of course, property is a very big market, so that's not necessarily a bad thing. But the challenge is that's very much a security. You're pegging a token to a real world asset. So it dramatically limits where you could list, and it dramatically limits the amount of capital that you could raise currently anyway, because you'd have to list it as a security, and most exchanges actually don't want anything that is definitely a security anywhere near them.
But there's an opportunity for government to allow that possibly. So.
Proactive. Yeah.
Any other comments, Eddie, Ryan? Okay, that's it. Another question.
So yeah, just in 2014, I was lucky enough to invest a month of my time helping Gavin and Vitalik with Ethereum, and then they went on to raise a reasonable sum of money and deliver unreasonable amounts of return. And what I see now is I haven't invested in a single ICO because I don't see anyone with the moral backbone to just raise a little bit less money now and just try and over-deliver. And I was just wondering if anyone here has heard of an ICO where they're not going to raise a stupid amount of money and they're actually going to try and deliver a stupid amount of value. Because if so, that's what I'd like to invest in.
Well, I mean, I can name...
So, I mean, notwithstanding, I think there have been, I'm going to make one comment on this, there have been, I think, some good justifications for some of the large raises, I hope, that have been communicated by folks on the panel. But I will also say I lived through the internet boom in my first software company. We actually did an IPO and had a market cap of $1.4 billion at one point. But there were other companies around us who actually, in a sense, kept their heads and didn't do IPOs. And actually, I wish we had been one of them. So I think there is definitely room for that thinking. There's somewhere in between is the right point. So Eddie.
Yeah, I agree. It's a real issue these days. I think it's also a real issue because as a token holder, you don't really want to see, you want to see an active secondary market. So of course, raising too much limits that potential. I'm sorry, but I'm going to talk about the two companies we invested in. So CoinDash is capping its market at $12 million, which I think today, by today's standards, is reasonable. And Indoors is capping it also below 20, maybe around 15. I'm not sure. So. So these two companies that we're investing in, we feel that they are going to limit themselves to the amount of funding they need. And we also feel that they have this moral backbone you were talking about. So hopefully these are two that you can look at.
So this is a really interesting dilemma in the space because on one side, just too much money can make entrepreneurs lazy, and we've seen this story before. On the flip side, an artificially low cap allows what I call scalpers to accrue a tremendous amount of value. So, picking up a certain amount of tokens in a time-capped token crowdfund and then flipping them on exchanges, and you have situations like with, for example, with the basic attention token, where scalpers basically confiscated the one block. A few people picked up the entire amount, and the BAT team received 35 million, and these scalpers received somewhere in the order of 70 million by the time the week was done. Now, is it more intelligent for these scalpers who don't add any technical value to these teams to be accruing so much value? So it's an interesting dilemma that we face. But I would say there are actually lots of very, very talented teams that have very prudent approaches to their token crowdfunds. So, for example, sometime later this year, we'll see a Kick, which is a massive, legitimate unicorn with hundreds of very talented entrepreneurs and a great management team, tokenize their kin platform, and the approach that they're taking is actually incredibly thoughtful and very prudent, and so that would be certainly one that I would look to with great confidence as much of a blue chip token play as we've ever seen.
I mean, there's two other things I'd throw in. So the first one is if the parties doing the ICO genuinely do KYC and AML, that is a natural break. You will not raise hundreds of millions, I can guarantee you, right? So, and by the way, that's something you should look for. The second thing is, it depends upon the ambition of the team, right? So if they're building a fairly simple project, which is executing on a particular part of a supply chain or whatever, then they don't need that level of capital. There are some, and I think this is where VCs come in and why we've been engaged, where effectively they're almost like they're raising capital for a thematic fund, right? So they're going after open mobility, for example. That's one we'll be participating in, and it will be very aggressive. It will be looking to do some acquisitions along the way. It will be looking to bring in a number of players into the orbit, and so for something like that, you genuinely do need lots of capital. I think what's more important is how's that capital managed, what's the governance structures, and I think as you were saying earlier, what's the hedging strategy? Because if they're just going to sit with a load of bitcoins in their bank account and hope that whilst their real world costs partly might be in fiat, there's going to be some corrections. I think it's going to continue going up, to be honest with you, but there's going to be some quite big shocks and corrections in the market. So you have to have all that in place, and I think that's why it's making sure what's the investor team that's around the kind of development team.
Eddie, you got one final point? One question?
Just making sure that Jamie doesn't mislead people. You cannot put your Bitcoin in a bank account.
So with that, I'd like to thank the panelists and the audience. I remain super optimistic that despite the challenges, both of the kind of the technology and the governance, but also human nature, that we will apply our smart minds to solve this problem, including the smart minds of crypto kid Leo as soon as he gets better. And once again, I'm Richard Muirhead, and I'm with OpenOcean and Firestarter. And if you're building stuff in this space, we'd love to hear from you, and we'd love to collaborate with these guys too. Thanks very much. Bye.